If you want, I can send it in the group.
Hello and welcome to the Saturday Education webinar that the Hindu conducts. Today we are looking at a slightly offbeat topic, not directly related to pedagogy or education or courses and curriculum and all that. We are looking at a rather emerging scenario where education, especially higher education, including school education too, it's not very different, but higher education especially is not, it doesn't come cheap. People do pay out money for it, and it is an investment. Now, there could be two opinions on whether that investment should be returned in money or there are other facets to education, but nevertheless, there has to be a return. So students have to plan their financial future based on what they spend, and once they get a job, it is not rare that we find high paying jobs coming to freshers. So you put a lakh, 2 lakh rupees in the pockets of a 22-year-old. Does he or she know how to spend it wisely? Or is that too much money that they splurge? We do see such instances where um, uh, some do seem to think there's no tomorrow, and especially in a situation where careers are not steady and progressive, and you get onto a job and you work there for several years, maybe take a career switch, do 2 3 companies, so that's your entire career. That's no more the case. There are disruptions that are happening, natural, accidental, or the economy changes, the technology changes, so we become redundant, so on and so forth. So there is this sense that there has to be a lot of financial literacy. It has to go up among students, among young professionals, so they save money for the future and they know how to plan and spend, how to plan and save. So to discuss this, we have a very, very interesting panel who will look at it from various angles. For instance, Shyam, who's here, who's uh, from an organization that recommends students on loans and other things, scholarships and so on. Their uh, basket of services. And he, for instance, looks at how loans are available, how scholarships are available, how students can intelligently fund the education. We have K. Ramachandran, who's a consultant, who writes for us, who's been a journalist too, and who he has some sage advice to students and parents. We have Ashish Jha, uh, who's from who also recommends who takes care of students, whose company Buddy for Study takes care of students. We have N. Muthuraman, who's an investment banker who has some very, very interesting, insightful tips to offer students in the current scenario. So, without spending too much time, let's start with who would want to go first. Shyam, would you like to go first? Do you hear me, Shyam? Is he in? He's not available.
Sham, this thing is
Is he dropped
frozen. I
out?
will go first.
Okay, so
You
you
can
go
go
first,
first.
Mr. Muthuraman. Yes, tell us about your work you do and what you see students doing, young professionals doing, and not doing.
Okay, thanks, Kalyan. Yeah, good evening, everyone. I am Muthuraman. I run a boutique investment banking firm called River Bridge. I also used to work with India's largest rating agency, CRISIL, for long years, and have been involved in assessing creditworthiness of companies for hundreds of companies. My okay. So why this webinar in the first place? As in, it's a sad reality that our curriculum has very little on personal finance and investments. So events like this try to fill this gap. Like Kalyan mentioned, young professionals with their first few months of salary, uh, if they don't have the kind of adequate knowledge and interest in this subject, could splurge and end up wasting that resources. So my target audience, as in the sense, for both students and young professionals. So I have these four mantras. I'll just develop each of these over the next few minutes. One, start investing early. 2, invest after doing your homework. 3, borrow responsibly. And lastly, take efforts to keep your credit score healthy. So start investing early. As in, it's a common folklore that the power of compounding is the eighth wonder of the world. I think Warren Buffett said that. It's very easy to get tempted these days by the gadgets and whatnot, but even very small investments in early part of your career will grow into very large sums over a period of time. So start investing early is the first mantra. How early, how small, doesn't matter. The habit of savings should start as early as one can. And so, in this context, a quick thumb rule. So, there is a rule of 72. Rule of 72 indicates your investment period multiplied by the return over that period will be close to 72. That means, say, for example, if you invest for 8 years and your rate of return is 9%, so the product is 72. So for doubling of your investment. So if you invest 100 rupees and if it becomes 200 in 8 years, the rate of return is 9%. So you can apply this in different combinations. Over 10 years, if it doubles, it is 7%. Over 3 years, it is doubles, it is 24%. So it's a very useful tool for you to quickly assess a particular investment is worthwhile or not. So first mantra is start investing early. The second one is please invest after doing a necessary homework. This is as in particularly for young professionals because you're either studying or just out of your education. It's easy for you to drill this habit early in your career. If you're starting to do this reading and research at the age of 40, probably your gray cells may not cooperate. But as young professionals and students, it's an important mantra. So for equity, if you're investing in equity, either read research reports and do your analysis before investing, or trust the experts and invest in either mutual funds or portfolio management services uh, so that the research is done by the third party. So there also some bit of research is required, but you don't need a subject matter expertise in analyzing balance sheets and things like that. You can trust the expert and invest in mutual funds. For debt, spend some time and understand credit rating. It's a very simple this thing. 2 hours of reviewing any rating agency website will tell you what's the credit rating. It's a very useful tool for your lifetime. Whenever you look at a bond or a fixed deposit or any other uh, debt instrument, the rating will immediately tell you whether it is matching your risk appetite or not, whether it is worthwhile to invest or not, or is it risky too risky for you. I would strongly advise avoid complex instruments like options, futures, or bitcoins, etc., until after you build a reasonable corpus where you can experiment with some small quantum for and take that risks. Uh, and after you do your reasonable homework and research, definitely don't go by tips that you get in SMS or WhatsApp messages, etc. Almost
Exactly.
always leads to a ruin. So that's the second mantra. First is start investing early. Second is invest after doing your homework. Third, on the liability side, borrow responsibly. As in, I have seen often many of the youngsters go for the next gadget because it is available on either uh, buy now pay later or it is a zero interest EMI. It is available. You just change your phone immediately. So a thumb rule again is that all the loan repayments put together should not be more than 40% of your income. So that's a thumb rule that you can use. Uh, Avoid credit card loans at all costs. It is the most expensive loan that you can take. So borrow responsibly to the extent possible. Borrow from reputed financial institutions, even if it means a little bit more paperwork. And the last one, this is the most important. Take efforts to keep your credit score healthy because it's going to be with you for your lifetime. A credit score of 700 is considered healthy. Building a credit history is important. If you can avail small loans, two-wheeler loan or loans for your mobile phone purchase or laptop purchase, and repaying them in a timely manner will give you a better credit score than not borrowing at all. So that's a surprising part. You build a credit history that is important. And for whatever reason, if you are not able to meet those repayments on time, settling your loan through a one-time settlement will practically close your access to formal credit forever. So there are ways and means by which you can get some counseling and solutions to improve your credit score. But maintaining your credit score healthy is important, a lifesaver for your entire career. The last takeaway: just Google RBI financial education, and you will get a good set of self-learning tools and videos. Make it a habit to read every week, and within few months, probably you can sit on this side and give a similar webinar yourself. Over to you, Kalyan. Thanks.
Thanks for those insights from an expert. Be aware of credit history. Start building a credit history. Do take things on credit, but repay them on time. And he covered quite a bit. We'll come back to him on specific issues later too. I think we need to walk back a little. Maybe we can have Ashish weighing in on how students can fund their education. Is a bank loan the only way to do it, or sell off assets, or what would you recommend?
Right. So, yes, so I'm Ashish and I represent Buddy for Study, which helps students fund their educational journey. And as a saying goes, that the most powerful investment that you do is that in your education only. And also various research suggests that every year of additional education adds 12 to 15% of your income in long term, right? So that is something that every student need to understand, that no matter what, if there is a if you think that you need to pursue your higher education, please go for it. And there are ways to finance your journey, higher education journey also. So I'm going to just lay out a simple pathway for students, as to if they don't see, they face problems, they are struggling to find money, or there is financial constraint due to which they are on the verge of dropping out, or if they are not able to pursue. So a few simple things they just need to understand, they just need to know, and the life and the education journey gets easier. So how to start? So the problem statement is that you want to pursue your higher education and you don't have money to do that. And that is one of the most important thing, because uh, the money that you are spending, the affordability for education is increasingly getting difficult in today's time. So I at Buddy for Study, what we have tried means we have seen that there is no dearth of financial assistance that a student can get. Not so, there are multiple opportunities. One, there are multiple government scholarship opportunities. In fact, NSP this year itself has disbursed more than 2,000 crore of worth of scholarships among students. And this is to diverse set of students, whether it be pre-metric, post-metric students. Then there are scholarships for specific categories of students. For example, for women students, for those students who have achieved good score in their respective classes. So I think there are avenues, but uh, how do you know about these opportunities? Where what are the steps you should be taking to avail those opportunities? Just to understand these things are very important towards finding those scholarships and funding avenues. So there are 4 5 steps that I am just going to share with you. One, you just first need to have the research, your own research in place. So go to National Scholarship Portal, go to state specific scholarship programs, which is listed on the state portals. Go to different scholarship platforms like Buddy First Study, Vidya Sarthi, right? And just by and do proper research. Put your current status, means I mean by current status I mean the class in which you are studying, your family annual income, because these are the criteria basis which scholarships program are designed, right? So you just need to have your clarity on your profile, search those opportunities on these platforms. And there are number of ministries also which are launching, which have launched many various scholarship programs for various categories of student. For example, for special those students with special ability, there are multiple scholarship opportunities. uh, uh, AICT has different scholarship opportunity schemes for girls and meritorious students, right? And in the similar way, there are multiple opportunities now. So once you have done your research, you need to analyze which opportunities you are suitable for. Once you have identified those opportunities, and it is not very difficult, means in today's time you have ways to use your devices and access to these information via online resources. Now once you have understood the opportunities for which you are eligible, you need to apply for this. And before applying, you need to have a few documents in place. For example, your annual income, which is sometimes means if the deadline is tomorrow or day after tomorrow or just 5 days away, the income cert creating and generating an income certificate for yourself might be a little means that might be a hurdle. So you need to prepare for these documents even before you start applying to these scholarships. So once identified, you need to get these documents in place so that the application to these opportunities becomes super easier for you. Once you have applied, there are so most of the interviews, scholarship interviews, not for the government scholarships, but for example SDFC bank provides scholarship opportunities. SBI Foundation is giving 100 crore worth of scholarship this year only. Then the Reliance Foundation. So there are multiple opportunities which are available now. Once you have applied to these opportunities with the documents and everything, you need also to prepare for some kind of interactions that they do before they understand your need. And so actually, why do you need a scholarship? So these things you need to analyze, you need to be prepared for when you are asked the need for the scholarship. And I think once that happens, your way to get a scholarship becomes easier. So scholarship is one part. Second part is you look for many. There are multiple government subsidiary programs, funding programs, through which so for example Bihar credit card scheme, under which students are given interest free education loan or very nominal interest on education loan, 1-2%. There is a scheme in Jharkhand which says which gives students a good amount of money for their study abroad dreams. We have government schemes. So there are schemes. Just you need to analyze, find those opportunities, and be ready with the documents. Have that understanding as to why you need these scholarship or financial aid assistance. And I think that is how that investment you can make towards your higher education journey.
Interesting, Ashish. You said some 2,000 crores of scholarships, government scholarships, were handed out last year. I believe
Yes.
many scholarships are not that the money doesn't get used. Is that true?
Yes. So means there have been instances. For example, Buddy for Study has been working with Ministry of Social Justice also to disburse scholarships to NT-DNT students. Now, what we have come to know, that over last 3-4 years, the ministry has not been able to properly utilize those amount of money. So, and in fact, we have partnered, and last year we helped them disburse 500 students. Now, this year we are helping them disburse to 4,000 students. Now, imagine that money was already lying there. But since the information was not reaching to students, or the outreach was not happening to the right set of students, that money remained unutilized. Now this is the gap that a few platforms like Buddy for Study is trying to bridge, wherein you readily get all the information related to all the scholarship program and other education funding solutions, so that you it makes easier your life, easier access, easier to the funding, and then your the process of applying and getting scholarships easier for you.
Okay, so when you're starting out applying for colleges, do look up government scholarships. That could be your
Yes,
first, because these are
yes,
free.
yes,
You don't
but
pay for them.
yes, but I must say there are multiple scholarship opportunities, private scholarship opportunities. In fact, GSK Pharma, they are providing 1 lakh rupees per year scholarship to students who are pursuing MBBS in government colleges. Then there is Helion Sensodyne, you must have heard. They are providing 1 lakh 5,000 rupees per year scholarship to students pursuing BDS in government colleges. In the similar way, L'Oreal has been over the years has been providing L'Oreal Young Women in Science scholarship program. They wanted to help those young women who are, means we all know that the ratio of women in higher education, especially in STEM, is skewed, right? So to just promote and support these girls, they give scholarship. They support the young women throughout their program during their graduation with good amount of money. And there are multiple other opportunities. I would definitely, means the Hindu has been also putting in Education Plus every week the alerts on scholarship opportunities that we share with you. That so so and I tell you, at Buddy for Study itself, with private scholarship opportunities, this year we are disbursing 1 lakh students, close to 1 lakh students, a total amount of 400 crore worth of scholarships in 2025-26. So this is the amount of money that is lying there. Students just need to know, information flow has to be there, and then the readiness and preparedness from the student side to avail those opportunities.
Excellent. So first check out all the scholarships, government, private. Then you
Yes.
maybe go for a loan or what? Can I ask K. Ramachandran to weigh in? When you plan for higher education, what would you do to fund your? You have your parents' money, of course, but
Sir, you are on mute. You are on mute, sir. Ramchandran, sir, you are on mute.
Are you able to hear me now?
yes.
Yeah. Okay. Sure. Okay. Thanks, Kalyan, for the opportunity. I am Ramchandran. I am a former journalist. I keep writing about on various aspects of education, and sometimes on areas of policy. Thanks for this opportunity. Uh, while I will probably answer or raise the kind of questions that Kalyan wanted me to, I had two follow-up questions, one for Muthuraman and one for Ashish. Can I do that first, Kalyan?
Go ahead. It's your
Sure. One.
lunch.
Muthu, one question always is, so while there are four mantras that probably you mentioned. So I
Yes.
also wanted probably your insight for students into understanding the whole idea of finance, the business of finance. So is there some way that students, while planning their, especially college students, let us say you want to plan, let us say you're planning for a career and you're looking at upskilling. For example, you're studying in engineering, but still you think that some of the courses that you do in engineering are not going to be as useful as it's touted to be, and you would like to take up an upskilling course or an extra course. So is there a way that that a student needs to know in terms of at a macro level, what are the things that he needs to pursue? So, for example, in the macro level, the economic, social, in public finance, in budgetary issues, and all that. So, while people will come and tell you AI is something that you need to know, cloud you need to know, data analytics you need to know, but is there a way that you can correlate between all of these and probably some trends that at a macro level and probably help students to decide, one, the amount of money that they need to save and they probably in the extent, and second is understanding money from a macro perspective so that they can plan it well in a way, while the planning, do not miss out. I will go for data analytics, I'll go for AI or something else. But is there some trends that they need to watch out? How can they get these trends from a macro level and still be able to correlate it and plug it into their algo when they actually plan for their finance?
Yeah, thanks, Kersey. See, I would take one step at a time. There are free courses available on finance for non-finance professionals. That's the first step. As in a sense, Google up for this. I myself had prepared some, and it's available in script and other things. So, finance for non-finance professionals, basic understanding of a balance sheet, understanding of P&L, basics of looking at a company. That is the first level. The second stage I would definitely encourage is over a period of time, start reading up finance, as in pink papers, regularly. Look for research reports. There are enough research reports that are available, free of cost, open to public. As in, if somebody has real interest in the markets, participate in a few analyst calls. The analyst calls of popular companies are free for anyone to join. They are supposed to make the numbers public. Stock exchanges disclose these numbers, and they share their presentations, they share their transcripts, etc. Just for reading, take one or two companies and read up the transcript, go through their analyst presentation, and actually live participate in some of those analyst calls. So that will give you a initial heads up and interest. Based on your interest levels, as in the sense, there is no end to extent of this thing. Even now, I'll be spending probably 8 to 10 hours every month, probably reading and catching up on the basics on the macroeconomy and how that translates into. One important thing that they can do to protect their value of their investment or take a call is that, okay, so how is the interest rate and what is the overall consensus view on how the interest rate is going to go? If the interest rate is going to go down, general thumb rule, the equity markets will do well, and your returns from debt will be depressed, and the counter will work as well. So interest rates tend to go up when the inflation is high and economy is struggling. Debt is, as in the current value of debt will go down, but locking in at higher interest rates, you can look at safer investments at that point of time than risky equity investments. So the, as in a sense, I'm not sure about the level of preparedness of audience for me to spend more time on
Yeah, sure.
how to analyze, etc. But these are the starting points. Get yourself familiarized with basics in finance, and then spending more time as a discipline, half an hour every week, will do much more wonders than trying to search for a tip and making some trying to make some multi-bagger based on some WhatsApp forwards.
Awesome, awesome.
Thanks.
Thank you, Muthu.
Right.
So one question for Ashish ji. Ashish,
Yeah.
so let us say there are two aspects. One is about the scholarships and loans and things like that. That's one. That's a one side of people who are aspiring, but who are looking at access equity at the same time. I'm also looking at one set of people, Ashish. So let us say I'm from a fairly decent background. In terms of playing, I can be I can fund for myself, or my parents can fund for me. But is there a tool that Buddy for Study or any other platform is offering me? So let us say I am interested in getting an MS from one of your top universities in the world, or one of the foreign universities. Let us not look at ranking, but I want to look at, say, probably a couple of foreign universities, or 10 universities, and then evaluate them. Is there a tool that is available for through Buddy for Study, or any other platform? How much will be the cost? How much do I need to save? How much do I take it as loan? Is there a way that I need to probably take some work? I can save up something. So, is there a specific tool that will help me to calculate the cost of higher education both in India and abroad, and then plan for that either as a loan or fund from family, or through? Is there a specific tool or that is available through Buddy for Study or any other platform?
Correct, correct. The answer is very interesting. So I would like to answer in two parts. One, the first one that you have raised, that is there any specific tool? I think with the evolving technology and the advent of AI, wherein any of your question and any answer that you want is just on the tip of your this mouse, right?
Sure.
So you have different tools which gives you different kind of output also. So for example, if you are looking for research driven output, you go to Perplexity. You are looking for some very subjective input, go to Gemini and OpenAI. And I think these tools which existed before the AI era, means as a AI going into mass, and this has become a norm in last 6 7 months 8 months now. Anybody and everybody, my daughter who is in fourth grade now is using AI to create test for herself. And I was amazed to know in the evening when I asked her whether you have studied today, she told me that she has not only studied, she has even taken a test. I said, how? She was telling me that she asked OpenAI to create a test and it did that, and she then answered and matched the answers also, right? So uh, the necessity of a tool, a specific tool to understand what are the opportunities, how much the money you need to invest, what are the top institutions. I think all the information now are being aggregated by AI, and you get the best answers using 2 3 AI tools, and you yourself can decide what is the best for you. So that is my take. And having seen the evolution and having been in the counseling space with Careers 360 also for 8 10 years, and in scholarship counseling space for now 7 years, and with the changing scenario, I think students today are very empowered to take their own decision, and with especially with those AI tools. So that is first part of my answer. Second is that the investment part, you were the first part of the question that you asked, Mr. Muthuraman, that the intelligent investment, what kind of intelligent investment or the courses on which they should be spending. Now, it's very crucial that students understand the ROI, return on investment, or on means the money that they are going to invest on a course and how much it is going to give them back. So, for example, till recently, computer science engineering was the most coveted stream in engineering, and it still is, right? But as you see, the time is changing, and the major IT companies, the entry level jobs and mid level jobs, that is in major crisis now. I mean, coding is being done by different
Yes.
platform. Cloud is doing coding for you, and every bit of coding it is doing. You can design your website by a platform called Lovable, right? So an entire front end and back end designing and coding, you can do that. So I mean, if you are still trying to invest on something which is going to be non-relevant in probably next 1 year or 2 years, that is going to hit you very hard. So it's very important that you understand the return on investment when you are pursuing your higher education also, or when you are probably doing a skilling course or something. You need to understand that very well. You need to do proper research as to what is going to be the trend. To me, investing a very high amount of money on a particular engineering program today is not going to help maybe get the money back, and maybe the investment that will not justify the amount of money you spend on such courses. So you have to be very wise. Skill is going to be important. If you understand how evolving technology is going to work, if you know how to use those technologies, that is going to be important, not the huge investment that you are going to put on a traditional course as on date.
Sure. Thank you. So,
I
Kalyan, I
believe
will now.
Shyam
Yeah,
is
go.
Shyam has been waiting patiently.
Yeah, that's right. Yeah.
Shyam is with
Yeah,
iThought. It's a portfolio management service. He's a founder of iThought. Shyam, tell us what's your take on the whole thing?
See, I think the most important thing young people in India should now give focus and importance to is what they can accomplish in their first 10 years of work life. Once you finish studying and you become a young professional, you have an extraordinary opportunity before you to march towards financial freedom. And what are the things that they should ensure before they embark on this march towards financial freedom? The first thing is that they should ensure that they maintain a very good credit score, probably north of 800 at all times, which means that they should get into the habit of making all their payments on time, not delaying any installments of loans, ensuring that they repay student loans, if any, within a reasonable period of time, and also uh, always maintaining minimum balances in their bank accounts for any checks that could come which they have issued. So they should be very financially aware of their situation, and they should monitor it on a regular basis. Today you have apps, so banking apps will help them take care of all this very, very seamlessly. So I think that uh, this is a hygiene issue first. That is ensuring that you have a good credit score, managing your finances in a very streamlined manner. All these things will ensure that you have a credit score. This is basic hygiene. The next thing is once you start earning, you will have two top priorities. One is extinguishing any loan liability incurred while studying. That's one thing. If you have a student loan, I think that you should repay it between 5 to 7 years. But I see a lot of people only focus upon repaying the loans and not really investing. I think a balance has to be struck between saving and investing every month, probably through an SIP or through a lump sum. A specific sum of money should be allocated towards investments, and another sum should be dedicated towards extinguishing your liabilities and loans which you may have incurred as a student. So there should be a balance between these two things. So what would happen is, on the one side, your liability would be coming down systematically and steadily. On the other side, your saving which you made as an investment would be compounding.
Yeah.
Now, two things will happen. One, your loan will get paid down over a shorter period of time. And more importantly, you would be marching towards building a significant financial corpus for yourselves. See, I think that many people start building a financial corpus after almost 10 years of working. It's important that you do it in the first 10 years of working. Ideally, a person should have saved, invested, and grown their savings to 1 crore rupees in their first 10 years. If you do that, then your financial freedom will come to you much faster. And not only that, you will be less indebted. You would need to borrow less for the other things that you would need to fulfill in your life, like marriage, buying a house, traveling, and any other large or rather big ticket need for money. So, all those things can come out of your saving, investment, and compounding. So, this is another aspect which everyone should remember. This is, I would say, muscle building. If maintaining your score, your CIBIL score is hygiene, I think this aspect of maintaining the right balance between extinguishing liability and investing is the next stage, which is muscle building. And the third part, which I want to emphasize, is that you need to always be prepared for any contingency and any emergency. Should always have some funds dedicated and kept aside, which will stand by you in any crisis. And in this regard, you should always ensure that you are adequately insured the moment you start working for your health and for your life, because your health insurance takes care of any medical emergency that you may have to face. You should also ensure that your dependents, in this case parents, should also be insured adequately. And your life insurance is again a safeguard or a guardrail against any unforeseen event in your life which can potentially deprive your dependents of your income over your earning life. So these are two things which you have to do. So this I would call as a defense or a shield. So there are three things that I've spoken about, and I'm going to close by summarizing. The first one is hygiene, the second one is muscle building, and third is forming a defensive shield or a dome over your financial life. So these three things are very, very important. The first crore is something which everyone should aspire to reach within 8 or 10 years of their work life. And it is important that while they do this, they become debt free, adequately insured, having enough term and health, and also maintaining a very good credit score at all times. This is what I think every student must know by the time he starts his work life. And this is something that every young professional must execute and implement in his or her life. Thank you very much.
Okay, thanks.
Very, very, very interesting. I wish many of us had known this. You actually start saving in your 20s. So with your first job, you start earning, and by 30s, you build a corpus. This goes against what we've been trained to think, or we tend to do. We start saving in the 30s, and then 40s, take loans, and then what do we have? It very interesting, very important piece of advice, Sham. I hope people listening in, because I do get, we do see and hear that young professionals spend as if there's no tomorrow. There's dekha jayega, we will see. Now is the time to enjoy. Now is the time to splurge. Okay, maybe I'll start saving once I get married, once I have family. You're saying the opposite. Very interesting. We'll come back with more details. There's still this little question that I had, that when you take a loan, it's a shot in the dark. How do you know what is it? KRC was asking if there's a tool, but I would like Mr. Muthuraman, Mr. Sham, and everybody to sort of enlighten students, give some tips, warning, or whatever, to when they're taking a loan to fund their higher education. What is it that they should look for? There's no formula. We don't know how. There's no ROI on the education loan, because I mean, it's an uncertain market. So many things that we don't know. We don't know how our career will pan out. But what are the minimum things that we should look for, that is students should look for? Mr. Muthuraman, would you like to?
Yeah, Sham will go first.
Yeah, I
Okay.
think, see, you should know what is a reasonable rate of interest that a student loan should carry. So it changes from time to time. So do your investigation at the time of taking the loan to make sure that you are getting a very good rate of interest, because that decides everything, because that will decide how much you're going to repay over the life cycle of the loan. So the rate of interest is the first thing. Generally, student loans seem to have a slightly higher rate of interest, but even in that, if you have a good credit score, your parent also has got a good score, I think you should get a good rate of interest. So rate of interest is something very, very important. Second is, you'll have to understand that, if you're getting a moratorium of
Yes.
for repayment, it's only going to make you repay more money later. So don't take long moratoriums and stuff like that. Don't go for loans which are structured in a way that will make you repay more money. So go for loans which are simple and which have a very, very modest duration and which make you pay from your first salary. So that is another thing that you must be very careful. And if you can pay even while you're studying, and you have the capacity to make good that income by doing some gigs or doing something else and earning that money, I think you should do that. Even during the period of study, you should be thinking of how you can repay the loan. And because I think that that's something that our students can do. They're not trying. The more you postpone commencing the repayment, the more money you're going to end up allocating from your income towards repayment of a loan. The whole idea is to shrink the percentage of your savings over a 10-year period that goes towards loan repayment as interest. This is the critical thing that every student should understand very clearly. Have this like a playbook and be very, very clear that your loans are priced correctly, the duration, the tenure is correct, and try and get the best deals in loans, because bad deals can make you spend a lot more on your education than you would have imagined or you can sustain.
Yes.
Yeah.
Sure.
Right.
Yeah, I'd just like
Nice.
to add a couple of points to that. Well summarized, Shyam. Uh, as a thumb rule, if the course that you are taking this loan for is good, the ROI will be fantastic. You don't need to do anything. As in, if you have to study in a reputed college, a good course, don't think too much. The loans will have a very high return on investment. You should go ahead. But if you still want a thumb rule, do some research on what is the likely average salary at the end of the course that you are likely to get, assuming this is a full-fledged full-time course. And the loan amount should not be more than 3 to 4 times the annual salary that you will get at the start. So with your growth in salary, probably like Shyam said, try to aim to repay that within 5 to 6 years or 7 years of completing the course. But the thumb rule should be that the loan amount should not be more than 3 to 4 times your starting salary once you complete the course. That would be a good thumb rule to work.
Sure.
Right. I also would like to just add a few points here. When we are talking about student loan and entering into that area, which is beyond those scholarships or financial aid thing, I think there are two ways student must look into before even getting into a loan. One that I told, there are various government schemes wherein the government subsidizes the interest also. So there is a central subsidy scheme for students wherein government pays your interest for the entire duration of your course. Most of the students don't know about it, and unfortunately neither the bank officials will help those or support or counsel those students even when they are eligible to take benefit of those interest subsidy schemes. At Buddy for Study, we have helped many students which they did not know when they are going to apply for a loan that their interest can be taken care by the government institution, right? So that is the first thing. Every student must try to understand these fine threads regarding education loan. One thing. Second is that there are various options wherein, for example, JN Tata Endowment Loan Scheme. Now that is a interest-free 10 lakh rupees loan that is given for any student who is going to study abroad. For then, I mean, once they are back, there is some moratorium period, and after that, they need to just return the money without any interest for that particular period. So there are multiple such schemes. So I'll again emphasize the student must research and look for these opportunities even before going to apply for a proper bank loan. If there is a necessity to apply for a bank loan, even after those that research, or if they do not find any scholarship opportunity or financial aid opportunity or any subsidy from the government schemes, they must try to minimize the education loan amount by looking for opportunities, whether they can engage during the course in some kind of live projects or do some sort of work wherein they get industry exposure also. So it is not only now about internship that after 6 months of study you go into a organization, learn or get hands-on experience and also get some kind of a stipend. I think this should make part of your student journey, wherein you engage in such kind of activity which generates some kind of money for you to sustain your some cost of your education, and that ways your education loan remains at a lower level, and which is then easy for you to manage after once you complete your education.
Sure.
Wise
So
words
let me
indeed.
in a couple of points.
Yeah.
Let's took a couple of points. See, one is, and especially for Shyam. So essentially, when you're planning all of this over a period, so let us say you plan your life, you plan your savings, you plan your investments. There are two things that are happening. One on the other side, there is a definitive need today for continuous learning, and these learnings are not. They say it is continuous learning, but fact remains that these are not continuous learning. These are actually new learning. For example, somebody who has passed out in 1990s or 90 or 2000, he needs to probably learn something in new areas like cloud or technology in those areas. So which means it is new learning, and he has to allocate some kind of money, time for ensuring that yes, there are free courses, but at the same time, if he wants to get some hands-on experience, he wants to do some things that are really going to help him out. There needs to be some kind of allocation of their existing funds from salaries that they're taking in the early years. That's one thing that they need to do. And the second thing, I think definitely there is need for a sinking or a career runway fund, as I would call it. A career where there is a distinct possibility that you will be probably losing your job, or you get laid off, you become redundant temporarily or permanently. So it means there is a sort of time between 8 to 10 months. You are newly married. You are in your sixth or seventh year of your life. You are expecting a kid, and suddenly you fall redundant. So you need a some kind of career runway fund. So one is a sinking fund, like to ensure that continuous learning happens even if you are 30, 40, 50. That's one point. And second is, how do you prepare for these kind of emergencies? Is there a thumb rule for that?
Yeah, I
And
think
these are new trends. These are new trends which are probably not seen probably in the last 10 years or somebody before that.
so. I think I wouldn't generalize. It depends on the career you are in. Let's say you're a doctor. Even doctors need to have certifications, qualifications, things they need to do after higher education. Even after you finish your PG, you need to do so many things to keep yourself
Yeah, right.
relevant and updated. You know the cost of each of these things. So, for example, if you're a techie and like you are saying, you need to go and learn something, you come to know what these cost. So,
Yeah,
all right. So you check today what something which is a meaningful new education costs, and you work towards building that in the first few years of your career itself, much earlier than you need to put that sinking fund to use. And then if you allow it to grow for a few years longer, that itself becomes a hedge against inflation. That's why the playing the game early makes all the difference. See,
yeah,
where
correct.
people are going to put themselves to grave risk is that they postpone doing all these things even while they don't delay any gratification. See, it's a double whammy. One, you don't delay any gratification. You want to enjoy life today based on your earnings tomorrow. That is,
Yeah,
you're advancing your gratification. That's one point. The second point is you fail to actually create things which will take care of you in a contingency or in a changed world tomorrow. I think these two together have to be addressed squarely by today's young people, because the world is very fast changing and you cannot find any quick fix jobs when you land in that situation where you just need to do it. At that point, becoming gravely indebted is going to take away your financial freedom,
yeah.
uh, keep it very, very far and sometimes even completely out of reach, which means that you need to keep working all your life. That's
So the
something
point,
that's happening in the.
yeah, the point I want to see, the number of row items, if from
Hmm.
from out of the kitty that I get, it's getting increasing. That's my worry. So for example,
Yes,
there is
that
a
is
loan
where
repayment.
starting early. That is where starting early can give you a financial dome, one umbrella thing which basically creates a larger cover for everything. Either
That's
you
right.
can have multiple line items and try to feed every line item, or you build a big dome like today you have in your defense parlance, which
Yeah,
basically
correct.
protects you from everything, right? So I
Yeah,
would think that building that financial dome is something that young people have to think, which gives you umbrella cover over everything.
that's right. That's right.
Are savings and investment options different for those in their 20s than for somebody in 30s, 40s?
Good question.
I would think so. I would think so.
Enlighten us, sir. More. Tell us more.
So I think a young person has got far higher risk appetite. His first decade belongs to him. So he's not under any pressure that money has to be put on the table for any emergency once he has taken care of the emergencies. So he's able to give compounding a clean opportunity and a longer opportunity. So I think that the risk appetite, risk capacity of a young person is definitely higher. And as a person grows older, their risk appetite goes down while their risk capacity goes up. What do I mean by this? Appetite is something that is, based on your life circumstances. Capacity is based on your earning and saving potential. So while your earning and saving potential keeps increasing, your life circumstances don't allow you to take the same risk which you can take when you're very young. So gradually you keep toning down the risk and moderating it as you grow older. That's what I wanted to say.
Sure.
Mr. Muthuraman?
Yeah, there are online tools where one can actually assess their risk appetite and what is their ideal asset allocation
Yeah, those are all
at
really available.
various stages of their career. Uh, just simple thumb rule: 100 minus age should be in equity and the rest in debt. That's just the starting thumb rule. But this is without taking into account the individual aspect, individual peculiarities and their respective risk appetite. But online tools are available to for individuals to assess their risk appetite, and that will suggest a model portfolio. How much should be in equity? How much should be in debt? How much should be in alternate investment assets? How much would be in gold, real estate, different this thing. So use those tools and then need not exactly match, but at least strive towards that. Then it will automatically take care. Younger ones will automatically, other in the sense there could be older ones with a higher risk appetite and younger ones with a low risk appetite. So the model or the tools will design your portfolio based on your individual circumstances. Make use of that.
We'll take some questions. Anwar Farouk, he posted very early. He was saying, educate students from year 6 or maybe class 6 in secondary education through compulsory personal finance national curriculum and do online banking with very small affordable amounts. He's saying this, get them.
But it's already
Get them
available, no?
started
So
early.
in CBSE, it's already available. So because I remember about 10 years ago when my kids were doing their school. In fact, I still have the book. It's called the Basics of Investing, Basics of Money, or something. The textbook is still available with me. It's not a concept. And second, now as I have posted there in our chat box. So RBA has a fantastic website. There are, in fact, it has got target audience for farmers, for students, for kids. So there are enough. So you just go there and learn for yourself. It's available free, high quality stuff, very animated, very interestingly written, and so legible, clearly. And I have Muthu. Is it available in different languages? I haven't checked.
Yeah, yeah, 13 different languages.
That's right. So those are available free of cost. That's one thing. The I also want to take one point which probably Ashish could. So Ashish, there is this called PM Vidya scheme, right? PM Vidya for loans for the very low cost interest for us. Somehow it is limited for some reason. I don't know. It will be great if somebody can write about it. The PM Vidya scheme is limited to students studying only NAR of 100. But actually, if you look back, NAR of 100 people are actually today in the present circumstances in which the way it is skewing IIT people with higher marks and or possibly also people coming with better backgrounds. So I think there needs to be a very, I would probably appeal to the Hindu in that way. If PM Vidya scheme could be extended to more students, not only NAR of 100, because the objective of the scheme is to provide low cost, decent moratorium based interest loans for students in engineering and other colleges and other streams. So that is something that probably I would take use this forum to probably write this appeal or make this appeal to increase. PM Vidya is an extremely good scheme, and there are different schemes. There are limitations in those schemes. I don't know for what objective. Maybe there had good reasons. But today, if possible, if those schemes could be extended a larger number of students, so the number of students entering is increasing every year, right? And it's going up by something like 4%, 5% every year. You talk 40 million people, 50 million people, and we are going to reach 93 million people by 2030, 2032. A large number of people will be eating, and the number of agencies, the number of organizations, the number of schemes need to go up. That way, that probably we need to look at it. Not only private government initiatives also in doing that. We could probably do some piece on that and probably do an appeal and probably even write a series on that.
Yeah, the website you were referring to is called https www.rbi.org.in/financial education.
Yes. So I just wanted to respond to Ramchandran sir. So sir, you pointed out as to why your PM Vidyashri scheme is there limited to NIRF institution, right? And why they are not allowing the institution at tier three level or tier two, some of tier two level institution to enter. There is a very uh, uh, deep insight into it. Actually, if you see the trend of the salary in the industry, salary hikes in the industry, or the pattern of salary that is there in for last 15 years, and there has been multiple discussions also around it. So 15 years back, the entry level salary of the Infosys or the major IT companies has just increased by 30-40%,
Correct.
while cost of education has increased four times,
Yeah.
400%.
Yeah.
So you would understand the huge pressure under which banks are dealing with education loan also, where they are at a much higher risk of getting into an NPA as far as the education loan goes. Now, so the clear mandate, though it is not being told, or at a policy level, we don't discuss. I mean, banks will not tell this very clearly, but then there is a huge pressure that you have to also have very low NPA in education loan
Yeah.
segment. You have to also see the ROI is there so that students is able to pay it back. You have to also see the salary pattern in the industry and how it is increasing, and also the fee, the amount of fee that is increasing for different courses. Given all this scenario, most of the bank and NBFCs have confined their education loan programs to the students who are in either in an IRF institution or top tier private institutions only, wherein they have been able to place the students. Now, it becomes riskier for the banks unless and until government does take that guarantee of
Yeah.
NPA of the banks. They will not be able to provide, and that is very logical for them being a healthy financial
Yeah. Of course, they
institution
have very
also.
good. No reasoning. I'm not questioning. Okay? Absolutely.
So
They had
yes,
the
so
good. Yeah.
as an outcome of this discussion, we can have probably a kind of campaign wherein we bring all the stakeholders together to create a fund which is kind of a revolving fund which takes care of such risky NPAs wherein students are not able to pay, and still the health of these banking institutions or financial institutions are not going to be affected. So can there be an evolving fund which takes care of such risks, and then education these financial institutions are able to freely support these students also, which are at a, tier 3 or tier 4 institutions as well.
Sure. Got it. Got it. Thank you.
Maybe we will return to the topic. Maybe we'll have a separate webinar on loan options.
Yes,
When you're taking a
yes,
loan, what
it
should you
is
do?
means because
Those.
in our experience we have entered into partnerships with 10 12 government banks, means different banks, and then there are private banks also which we have been talking and helping students, because out of 100 students who apply for scholarship opportunities, we are able to provide only 3%
Yeah.
of the means support to only 3% of them. Now, what happens to these 97 students, 97% of students? So they are either left with no option, because there is a huge gap in demand and supply. Demand of the financial assistance, and supply of that money. Now we are left with options to go to these financial institutions wherein they are. So if somebody needs 50,000 rupees to pursue their kind of the course, right, the course that they think that is suitable for them, they are not able to get 50,000 loan, क्योंकि that is a huge risk. एक तो there is a process cost which banks don't want to invest on giving a 50,000 rupees loan or 1 lakh rupees loan. So low ticket size loan is completely disallowable in banks, and that is where the problem lies, because that is where the bottom of pyramid is. Means most of the educational institution, most of the general courses, most of the STEM courses in government or private institution, wherein the fees is only not the concern, but also the other expenses, educational expenses are. So 50,000 rupees, 1 lakh rupees loan are completely out of question in today's scenario, which is a very big concern for students.
Maybe this panel can return. We'll discuss loans more. Parimala Money, she's asking, what are the online tools to assess? KRC brought up an RBI website, assess loans.
So I can see, is there any portal that lists all the scholarships and fellowship available? Yes. Buddy for Study is the one, and then National Scholarship Portal is the other one. Yeah.
No, no, she's asking about loans, I think.
No, I saw another question, sir. It is at
Okay.
6:6 p.m.
Okay. Parimala Money.
That is by Robert
Yes.
Zimmer.
Yes, yes, right.
We couldn't
No,
see any query from Parimala.
We'll field Parimala Money. She's asking how to settle loan using one-time loan settlement or what? When you want to settle loans, how do you do it, sir? What's the best way? Shyam?
So I
Shyam would
think
be the-
you'll have to go and negotiate with the lender, and that's how you do it. And there are there are professionals who also help you negotiate and guide and how you should reduce this. That's a separate activity.
Okay.
Yeah. So there one point I'd just like to add there. At the time of your distress or inability, you go ahead and do a settlement. You do negotiation directly with the bank saying that, okay, I can pay 40%, I can pay 50%. And the bank agrees. And then they will report that as a settled account in your CIBIL score, in your credit bureau. So once it is mentioned as settled, that is a black mark on your credit profile forever.
Yeah.
So ideally, after you get back on your feet and you have the financial ability to settle the balance amount, whatever your shortfall is, take some counseling, go back and repay the amount in full, and in a few months' time, your credit score will come back to healthy levels. So then you have permanent access to low-cost borrowings from financial institutions. 1,000 institutions are there today which can lend to you. But as long as this entry of settled, a one-time settlement, a settled is there in your credit history, it is always a black mark, and your pool of lenders from whom you can tap money goes down. Your credit score is poor, and your cost of borrowing will remain very high, or probably your loans will get rejected, even if your current income levels are healthy. So
Correct.
it's always better to go back and open that file and settle that full amount due
Correct.
whenever you have the ability to, and then you can build your credit
Start
history.
afresh.
Start
So
afresh, get a good credit score, and then proceed.
don't take an haircut unless it's totally necessary.
Yeah, no. So, for example, as in obviously, you will not take a haircut when you have the ability. This thing, if it's in distress at that point of time, you have taken a haircut. That's fine. But
But you
then
go
once you
back and
come
mend
back
it.
to your better financial position, go back and close clear this
Balance
black
amount.
mark on your credit history, so that you get full access to the entire set of prospective lenders and best rates.
In your experience or in your
Sham,
observation,
Sham
do
wanted to say something.
many education loans end in haircuts? Is that a widespread thing that happens?
Sham, you wanted to say something?
No. Let him complete his point.
Yeah.
I was
Sir,
asking, your
education
experience-
loans, the NPAs faced by banks and other specialized institutions like Credila on education loans, it's a mixed bag. There are times when education loans have had a very high levels of default. That is what is resulting in higher interest costs for education loans.
See, I think
Okay.
that education loan sector, people think that it is a dole. A lot of people think it's a dole, especially when it comes from a public bank. People
Yeah.
mistake it for a dole. It comes with a very heavy personal cost because your CIBIL rating is going to be. I know people in their 30s who have terrible CIBIL rating because they have not repaid their education loan. Even after the loan was sold to somebody offered them to close it at some 20% of their due. They don't want to even do that, right? So I think people don't know the consequences. So they mistake it for some kind of a subsidy. a loan is not a subsidy, right? It's support, not subsidy. So support has to be returned.
Yeah.
So I think the
Yeah.
understanding is poor, and I think this is a social issue. It's for another discussion.
Yeah, I just like to highlight one more point. Each of the listeners should actually take that effort to go and download their CIBIL or credit bureau
Correct.
report and read that line by line. Actually, it will be a shocking. They will have every information about you
Yeah.
going back 20 years, 30 years, 40 years back also, where you stayed, what all phone numbers you had, where all you got employed, what all credit cards you had taken, even credit cards that you had declined, not taken. All of that is captured.
Where even an inquiry will be there. Where all you ask for a loan will
Yeah,
be there.
where all you ask for loan. Yeah, that is a lot of
Mhm.
people don't know. They just give application
Keep
to
on
20.
inquiring.
Yeah, keep on inquiring. Every time you inquire for a loan, your credit score goes down. So a lot of people don't know about it. It takes some time. It definitely worthwhile for young professionals to read their own credit report. It is mandatory for each of the credit bureaus to give you your own report free of cost at least once a year. Okay. So many of the banks actually link it to your online banking, and you can download from there also. More than once in a quarter, I think there will be some small charge. But at least first time you read, it will be an eye-opening exercise for your listeners.
Today, GPA also has that. If you have a GPA, there is a credit, there is a CRISIL rating that you can actually get.
Yeah,
Yeah, yeah.
CIBIL rating.
Wherever you have a loan, there are a lot of progressive organizations which want you to be aware of your rating.
Yeah.
It's a it's like it's like the floodlight in a stadium.
Yeah.
Mm.
It's the floodlight in your life. It lights
Yeah.
up your actual position. Yeah.
That's right. That's right. Sure. Sure. That's right. Uh,
Interesting discussion. Very, very important, useful takeaways. I hope the panel can come back and discuss loans and other issues. So many things kept cropping up. Um, we need to close now. We've gone 15 minutes over, but we will return to this topic, financial health of students and professionals again. I thank the panelists for joining in. I hope the war gets over soon and we'll be back to discussing very, very important things such as this more, and we can focus more on this. The government can also focus more on this, and every organization can do too. With that, I close this discussion. We'll meet next Saturday at 5 p.m. for another education webinar. Thank you so much.